So when you talk about nuclear assets, is that nuclear plant running at a 40% capacity factor, a 50? If it's running at a 100% capacity factor, they don't really have a need for stranded wasted energy. So Mark, to answer your question, it comes down to a plant by plant basis for how we target some of those assets. So I don't think you can say it's nuclear in general. It's just which is the right nuclear asset to look at a behind the meter crypto operation.
Just because the facts are A, if the narrative is B and everyone believes the narrative, then B is what matters. But it's our job in our industry to speak up proudly, soberly, and to engage people in this dialogue. Those 2.5 billion people that are in energy poverty, they need us.
America cannot meet this threat alone.
If there is a single country,
of course, the world cannot meet it without America,
that is willing to
but we're going to need you, the next generation, to finish the
overhaul
job.
nuclear regulation,
We need scientists to design new fuels.
focus on net public
We
benefit
need engineers to invent new technologies. We
over absurd levels of radiation
need
protection,
entrepreneurs to sell those
then
technologies.
we will march towards this.
We need workers to operate assembly lines that hum with high-tech,
where
zero-carbon
we have
components.
unlimited prosperity for all humans.
We need diplomats and businessmen and women and Peace Corps volunteers to help developing nations skip past the dirty phase of development and transition to sustainable sources of energy. In other words, we need you.
Welcome to another episode of the Fire Division podcast. My name's Mark Hinaman, and I'm joined today by Sean Farrell, Senior VP of Operations at TeraWulf. Sean, how you doing?
Doing well. Thanks for having me.
Sean, really excited for this discussion. We've done a bunch of research on TeraWulf and excited to dive in and talk about the company and some of the work that you guys are doing. So before we get there, let's learn a little bit about you. You're a CU Boulder grad, as I understand it.
I am. Go Bus. We finally have a football team with Deion Sanders, so not perfect, but doing much better in the previous years.
Yeah. Hopefully this podcast ages well, and people come back and listen to it a year or two from now, and we're happy about these statements.
Well, if we did it last year, it couldn't get worse, so that's at least positive.
Yeah. What's your background, Sean? You spent a lot of time at Siemens. Talk to us a little bit about that.
Yeah, so I joined Siemens directly out of school at University of Colorado, Boulder. So a Buffalo grad, did engineering out there. I was mechanical and biomedical.
What year did you graduate?
2010.
Okay. We overlapped a little bit then. Yeah.
Nice. Yeah, so I joined Siemens directly out of college, was with Siemens for just over 13 years, both Siemens Energy and Siemens Gamesa, through a variety of different roles. Started in oil and gas, fossil service, transmission distribution, did a pretty long stint dealing with renewable H2 transmission solutions and kind of what we call non-traditional energy technologies. In the last 2 years, I was with Siemens Gamesa, and I was head of sales, marketing, and business development for North America for the wind division. And I joined TeraWulf June of last year. Most people call joining the crypto space the Wild West. So I took the leap, and I've been here for about 18 months on the crypto side. And now I still reside in Denver, Colorado, and I lead development, construction, and operations.
That's awesome. Well, we got to throw some props for alma mater. And do you feel like CU prepared you well for your career at Siemens and then your subsequent leap into the crypto industry?
Yeah, absolutely. I think a lot of internships with get my engineering degree at Colorado bode very well for the career that I've taken. Since college, haven't really had a engineering per se role, but just having that technical background, really being there at the table, understanding all the really technical aspects of the energy space has really done well for me, both with Siemens and now as I'm with TeraWulf and really leading a lot of construction activities. So absolutely.
That's awesome. Yet you held a bunch of different roles at Siemens. I mean, tell me a little bit about your career progression there. Was it kind of on pace or was it accelerated? Or did you lag behind? And yeah, let's start there.
Well, I don't think anybody would admit they lagged behind. Accelerated. So when I joined Siemens again directly out of school, I was in a program called Sales and Marketing Development Program. It's a pretty prestigious program at Siemens. Those 8 people, I think I have about 1,000 applicants that applied for the role. 8 were accepted. It's 4 3.5-month rotations. So you actually rotate through different business groups within Siemens, and it fast tracks you out into the field or into a marketing role more on the energy side of the business. So I had 4 different roles, 2 in Orlando. It was service strategy, so fossil service, more with coal and gas plants, technical wind turbine sales. It was a field sales rotation, and then I had the opportunity to work at our transmission factory in Jackson, Mississippi. So that's where I really got to understand the more transmission and equipment side of that space. After that, I was up in Minnesota supporting the upper center of the U.S., like the Dakotas, Wisconsin, Minnesota. That was more oil and gas, fossil service. And then after that role, I moved out to Denver, Colorado, working more transmission distribution. It was a big learning curve for me since that's more the electrical aspect of the engineering when I was a mechanical background. But I really liked that space, stayed in Denver, still to where I am today. But I did rotate through a bunch of different roles, both management, director, and then that's where I also supported, earlier I mentioned the H2 space, battery storage, transmission solutions. Again, more the non-traditional, everyday solutions in the energy space. I supported that out of Denver. And then from there, that's when I transitioned to Siemens Gamesa. Again, out of Orlando, that's the one benefit for COVID. When actually COVID happened, the Orlando office turned into a more of a remote working center. So I got to stay in Denver, Colorado, which also I think is more centrally located in North America for a sales role than the southeast corner of the U.S. So I was there for 2 years before coming to TeraWulf in June of last year.
That's great. That's awesome, man. But I'm curious, you said fossil service. What does that mean in the power turbine space? Is that fossil power plants or is that smaller fossil generation?
So all of the above. Siemens had a very wide portfolio for the small steam turbines and gas turbines, all the way up to the big F, H, and HL class turbines. At that time was more on a lot of the coal plants in the Dakotas, and then there was a lot of gas assets as well. So doing their routine service, a lot of those plants come down fall and spring. So supporting that scope in those service contracts was more the fossil service aspect to that role.
Got it. You mentioned hydrogen versus fossil. Hydrogen has a lot of hype right now. I'm curious on your perspective. Can you give us some color on if we'll just be able to replace hydrogen, replace natural gas with hydrogen in all of the turbines that we have installed across the U.S. Or not, and why?
Yeah, I've been out of the space for probably 3-4 years, but your GE, your Siemens, your Mitsubishi, for the larger turbines, they're able to burn up to 30, 50%. Now, most all the OEMs now can burn 100% H2. One of the issues with H2 is one, storing it, compressing, and transporting H2, as well as generating it. So Siemens had what was called the electrolyzer, and that was a PEM technology for the electrolyzer. Very energy intensive. They are starting to gain a lot of traction with as the IRAs come out with different tax credits and different incentives to push hydrogen. That's what it's really going to need to really take off, as well as when you're looking at like a big transmission system of H2, you got to be able to transport it. I mean, transporting it by truck is not going to be economical on a large scale. To answer your early question, do I think it's going to completely take over? No one knows where we're going to be in 2050. Like a lot of the gas turbines, you're looking at burning H2, you're looking at burning alternate fuels. A lot of the large utilities out there have said they're going to be zero carbon by 2050. Do I have the magic 8 ball to say if that's burning 100% H2, if that's going to be burning ammonia or a different type of gas? I don't know, but it's definitely going in that direction.
Okay, well let's pivot to your current gig, TeraWulf. What is TeraWulf? How'd you guys get started?
So TeraWulf is a zero carbon crypto mining company. We're vertically integrated and really focusing on accelerating the clean energy transition. Right now, we're 160 megawatts of crypto mining across our 2 sites, upstate New York and in Pennsylvania. So upstate New York was actually at a 700 megawatt retired coal plant. The plant was retired in March of 2020. It was 1,800 acres, a lot of electrical infrastructure at that site. We were actually able to utilize a lot of the electrical infrastructure from the old power plant and co-locate data centers. It's a very unique location because, again, we're striving to be zero carbon. It's 91% zero carbon, so the power for that plant is in NISO Zone A, and it gets the majority of its power from Niagara Falls, obviously a hydro, as well as Fitzpatrick Nuclear, which is in upstate New York. So very well-positioned plant. That's also an asset where there's not much load in that area. So, as we go through our discussion today, that asset actually acts to stabilize the grid and stabilize a lot of transmission in that area. We're working on a construction at that site right now for an additional 45 megawatts. So with that, we'll be about 160, 165 at that site, plus our Nautilus site, which is 50 megawatts. That's the one in Pennsylvania. That is a behind the meter Bitcoin mining operation. The overall site is 200 megawatts. We have a 25-75 JV with Talon. I'm sure you've heard of Talon. They're a very large IPP here in the US, and we have 25% of that. Both us and Talon have an option to expand 50 megawatts each, which, for what we're going after, for the zero carbon aspirations that we have for TeraWulf, we're heavily looking at that opportunity. So by the end of this year, we'll be over 200 megawatts of crypto mining, and we have some pretty big expectations to continue to grow.
Why is the zero carbon component important for you guys?
ESG personally has always been a large focus for me as of recent. As I said, I started out my career in the fossil side, and that transitioned drastically, where my last role was focused on Siemens Gamesa and the wind aspect. ESG is a huge focus of a lot of investors and a lot of large corporations. So being an ESG focused crypto mining, I really think that differentiates us from our competition, as well as we're all energy guys. The biggest thing for crypto mining is your marginal cost. So where we locate our assets and not really where, but what we pay for energy, that is huge when you're starting to talk about your margin stack and when you're mining for Bitcoin. A lot of the guys that work at our New York power plant, or we're at the New York power plant, which is now Lake Mariner Data, they were at the plant for 20, 30 years. So these guys operated a very large power plant. And if you can operate a power plant, we say you can operate a data center. The data center has a lot of electronics. There's not any rotating equipment. You got rotating equipment at a data center, for the most part, it's bad. So from a maintenance perspective,
there's disk drives in some of them, right? Don't the CDs spin, I guess, right?
Yeah, you got the fans
Unless
on the
they're all
miners.
solid state now. Yeah.
Yeah, no, you got the fans on the miners for cooling them, as well as some of our infrastructure has exhaust fans, to assist with cooling. But it's just proven that the guys in the power space, just having that that mentality. I'd say the best crew that we have, and the one that I've seen, is our Lake Mariner data facility.
That's
and
great.
You're probably going to ask the question, how are we accelerating zero carbon growth?
Sure.
Again, we're energy. So when you look at Bitcoin mining, it's not like a data center where you have to be 99.9999% online. Crypto mining, you're going to mine when it's beneficial to mine. So where we're located, we participate in upstate New York in a lot of ancillary service programs. When the grid's stressed, we shut down the mine. So we support the grid. When the grid needs that additional power, we come offline to help the grid ride through some of those peak times. But also when you're looking at how to make the grid zero carbon, one, the grid's very old. It needs to be refurbished. And two, we're going after huge ESG goals, and the only way that you're going to build large renewable projects if it makes financial sense. So by having a lot of these responsive and dynamic loads on the grid, when it's nighttime or when it's the fall and spring, when the demand is a lot lower, you have these dynamic resources that can pick up those troughs in the demand, and you can actually bring economic value to a lot of these investments, both on the ESG and transmission improvements. So Bitcoin really acts as a stabilization to the U.S. grid and allows for further investment.
That's a phenomenal talking point, right? So I've heard previously that, energy is kind of the primary input, and having inexpensive energy is critical to be competitive in the crypto space. But how does hash rate impact your guys' profitability and business model?
Absolutely.
Seems like an important metric also. And, I guess it's changing continuously. Mm-hmm. But I'm curious, if you had to rank it against energy, how do they compare?
Well, you can't really rank them as they go hand in hand. Everybody's battling the same Bitcoin fundamentals. So when you talked about hash rate is the amount of computational power that we have at the site. So to step back, when we're talking about Bitcoin fundamentals, you have a Bitcoin price, which everybody sees on CNBC. It's always there in the bottom right of the ticker. You have your network hash rate, so total number of hash rate on the Bitcoin network at one time. Your hash price, which is usually like $1 per terahash per day, which just shows how valuable each hash is on a daily basis, as well as your network difficulty. And your network difficulty is correlated to the amount of hash rate on the network. Now, everybody's battling those same Bitcoin fundamentals. I mean, we're a publicly traded Bitcoin miner. We're on the NASDAQ. So all the other publicly traded and privately held Bitcoin mining companies are all battling the same Bitcoin fundamentals. So then it comes down to the size of your mining operation, which is your hash rate, as you mentioned. But most importantly, it's going to be the efficiency of your miners, as well as the power price that you're actually paying to energize those miners. And again, we feel that we are leading this space based on where our sites are located. Like up in upstate New York, very aggressive power. For Nautilus, we have 2-cent contracted power, which is unheard of in this space. So that allows us, to mine all time or almost all time at Nautilus, and the vast majority of the time for New York, as we do have that, low sustainable power.
Sean, what's the regulatory landscape look like for the industry? Are there a lot of rules that exist? Are there more in the pipe? I mean, regulators always like adding rules and never like subtracting them. But where do we sit now? Is it still Wild West?
Well, I used to say Wild West. Now I guess I would just say Wild West and knock off one of the wilds. But I mean, to answer the question directly, it's gray. But there's a huge optimism in the
gray, like the color, not great, right? Like
Grey.
Clarify that I heard that correctly, right? Yeah.
But no, I mean, there's a lot of optimism right now. I mean, if you've been watching Bitcoin just in the last week, it's up almost 20%. And a lot of that is based on, there's a lot of optimism on BlackRock getting their ETF approved via the SEC. And, I think that's just showing that where the public persona, where governance is going around Bitcoin, it's going in the right direction. You also will see, I think it was October 12th, the Bitcoin network hash rate hit an all-time high, hit 450 exahash, which it's going in that direction. And I think the numbers don't lie. It shows that Bitcoin is here to stay. It's an asset. It's an industry. It's not going anywhere, and there's got to be regulation behind it. In the past, to answer your first question of where are we right now, a lot of the regulation has been based on enforcement. As I said, Bitcoin's here to stay. They're forecasting the last Bitcoin to be mined in 2050. We have a long road ahead. Everybody that I've talked to, we're wide open to accepting regulation and governance. It just needs to be bidirectional.
I guess you say based on enforcing. What does that mean? Yeah, I don't understand that.
It was more based on enforcement, wondering what was right and what was wrong. And, when someone did something wrong, it was more of an enforcement. I mean, a good example is with Coinbase. I think it was Coinbase and Binance. There was a lot of the
So if there's any fraud or illegitimate activity in the market and people are abusing either the marketplace or the financial instrument to take advantage of people, then how do you adequately punish that? Is that a different way to say it?
Yeah, exactly. So a lot of the tokens that were in that lawsuit with Coinbase and Binance, it was, is this a security or not? And there's not a fine line of what's a digital security and what's not. So I think once we get some more transparency on what the regulation and the governance is, it'd be better for both sides.
Do you guys, you've got several hundred megawatts installed now. Do you have a growth profile that you can share for kind of how much more you expect to add, or year over year? I mean, data centers are growing 40% year over year, right? Yeah.
Massive. Yeah. So Lake Mariner, again, that was at the Somerset power plant in upstate New York. We have aspirations to grow that considerably. So right now, what's under construction, like I mentioned, we're going to be close to 160 megawatts. Right now, the interconnect at that site is to 250 megawatts. We're in the process right now to open that up to 500 megawatts from an interconnect perspective, which is very feasible. Again, it was a 700 megawatt power plant, and that power plant had plans to build a second unit. So that transmission line really was built to do almost 1.5 gigawatts of capacity. So the aspirations
that's
and the
big, right?
that's massive.
And for an electrical asset in the U.S., that's relatively uncommon that you've got that, say, overcapacity or excess capacity already in place and have an area that can readily accept that.
Yeah. And we've already done the engineering study. Again, I don't think we're ever going to put 1.5 gigawatts at that site, but the 500 megawatts
Oh, come on,
is
Sean. Yeah, you think big.
build.
Yeah.
I mean, the 500 megawatts is very feasible. We have plans to do it. I mean, I have plans right now that goes out to building 7, and right now we're building 3 right now. So the buildings are going to get larger. They're going to get more efficient. So that's for Lake Mariner. There's other growth plans. We have an opportunity to expand at another retired asset in upstate New York, more in Ithaca County. There was a 300 megawatt plant up there that we have an option to expand about 50 megawatts at that site. And then we're looking at other sites across the U.S. Again, it's got to be zero carbon. So we're looking at a lot of renewable sites that are heavily curtailed, where we think we could co-locate crypto mining and get some very cheap, low-dollar energy, but again, sustainable and actually more system utilization. That curtailed energy is stranded, it's wasted, and it's making struggling economics for the developers or the owners that built that renewable asset. So by co-locating the Bitcoin mining at some of those sites, it's a win situation. The stranded wasted energy gets turned into money. So, it's a real asset and a real benefit for a lot of these projects that are struggling to stay online today.
Got it. You've already mentioned that price is important to you, but is there perhaps nuclear recently or historically for new nuclear has not come in at the lowest dollar per kilowatt hour often? And so I'm curious, how do you guys think about nuclear being advantaged in this space, or you guys wanting to go with nuclear as a generation source versus perhaps other low carbon or zero carbon sources? And if it's not, or you don't, then it doesn't make sense. Then yeah, that could be the answer.
But that's a great question. But it comes down to which nuclear asset are we discussing? I think 9 Mile was the oldest operating nuclear plant. It was built in 1969, still operating today. When
Where
you
is
talk
it for those that are unfamiliar?
New York,
Yeah.
so when you talk about nuclear assets, is that nuclear plant running at a 40% capacity factor, a 50? If it's running at 100% capacity factor, they don't really have a need for stranded wasted energy. So, Mark, to answer your question, it comes down to a plant by plant basis for how we target some of those assets. Again, we will target areas that have historically low energy price, very sustainable energies, so almost 100% zero carbon, so hydro, nuclear, heavy renewable penetration. And you look at a lot of different metrics and see where those lines cross, and that's where we really look for expansion opportunities. So I don't think you can say it's nuclear in general. It's just which is the right nuclear asset to look at a behind the meter crypto operation.
Would that include new nuclear, like advanced technologies, new reactors?
That's the question of the day, because when we talk about a diverse energy mix going forward, I think nuclear's got to play a part. You have Vogtle Nuclear Site in Georgia, Unit 3 and 4, I want to say started construction in 2009. Unit 3 just went live this year. Unit 4 is still under construction. That's 14 years for Unit 3 and 14 plus years for Unit 4. So just the length.
We got to do it faster.
Yes, you got to do it faster. You got to make sure that safety is still at the forefront of a lot of these nuclear designs. But nuclear is a fantastic technology. Nuclear has been around definitely older than you and I, and it's a proven technology. And that's a big need for the nuclear industry, is educating the public persona on why nuclear is good as we look at these ESG goals and as we want to go zero carbon. So do I think there's going to be larger nuclear plants built in the future? Yes. Do I think a lot of the small modular nuclear reactors that a lot of private equity groups, a lot of companies are investing in and doing heavy R&D, it's also being heavily discussed in DC. Do I know if it's going to be small reactors or large reactors in 20 years from now? No. But I do believe there's going to be reactors being built as we move through this energy transition.
I like that. Do you think there's opportunity for you guys in the coal communities that are transitioning right now in the U.S.? You mentioned workforce transition in one area.
We are the best example of that.
Yeah.
We had
tell me more, because there's multiple communities in Colorado, including like where I grew up, that our coal communities, they've got coal plants, and those are all closing. So what would it look like to have you guys move in and make transition some of those jobs?
Well, first off, even though I'm sitting in an office in New York City, I live in Denver as well. So I know all the coal plants you're talking about very well.
Yeah, we're biased. Yeah,
Yeah,
it's close to home for us.
absolutely. It's a huge opportunity. I mean, we call that a brownfield opportunity. So you have like one of the hardest things for a large load on the grid is the interconnect. So if you can actually go in and decommission some of these coal plants and then utilize that interconnect, utilize the local resources, because a lot of these towns are small towns. When you shut down a big coal plant, it makes it tough for that town to survive. So Somerset's a prime example. Somerset was shut down. We've brought back 21 of the local employees in a very small community up on Lake Ontario in upstate New York. And those are the guys that we're employing today. The vast majority of those 21 folks are the ones that were working at the power plant before. And there's multiple examples of father-son, father-daughter examples that we have multiple generations working at that plant or worked at the plant prior. So that's a huge focus for us. As we're looking at expanding, we look at the old coal plants. Is there any equipment that we can get from those plants and repurpose some of that equipment for some of our data center operations? We look at that. So we look at equipment, resources. It is a space we heavily focus on.
That's awesome. I'm really hopeful that you guys can execute on some of those projects and really make a difference in a lot of these communities. So let's shift gears a little bit. There's been some, I think, recent legislation that's come through, but what's your view on some of the more macro energy industry lens and the micro crypto mining lens? Like, have any recent laws or bills been positive or negative for the industry and for you guys?
Well, obviously, if we talk, macro from a renewable perspective, the IRA, that's going to be huge for driving wind and
It's a
solar.
little helpful. It's a little helpful.
Extremely. So, when I left Siemens Gamesa, that's when it was finally starting to get the guidelines put in place. But it's a huge runway. It's what's needed to drive the renewable transition. But the IRA, I mean, it was across the board. It was wind, solar, transmission. There was some nuclear language in there as well. So it's just helping the whole entire energy landscape as a whole. So that's going to be a huge driver as we talk, accelerating the zero carbon energy transition. So again, thanks to the IRA. And we're heavily following that. Is there any wind projects that we can co-locate at? Is there any renewable projects we can co-locate at? I think there's going to be a lot of those opportunities in the future. From TeraWulf, we're a public company. We're listed on the NASDAQ. So we're heavily compliant with the SEC, all the fun 10Qs and all of those filings that our accounting and finance team has to do. I think, one thing that you're probably going to ask is around, are we heavily tied into the NRC, Nuclear Regulatory Commission? And the answer is us directly, no. Our JV partner at Nautilus, Talon owns Susquehanna, that 2.5 gigawatt nuclear plant. So they do a lot of that compliance, and they're very, very tied in there. From a crypto space, there's a digital commerce, chamber of commerce. We actually had some folks there, I believe it was yesterday or today. That is really
Is that non-centralized also? I mean, is that they only have Zoom calls? Or they're all anonymous? What's a digital
I saw a
chamber
picture of a lot of
look
people
like?
come together, so that one was definitely in person.
Okay,
But
I like that. There
I
you
mean,
go.
it's a great chamber.
Distributed currency, in-person parties.
There you go. Yeah, decentralized, currency and centralized get-togethers. But for the digital chamber of commerce, they're really driving how energy and the digital space come together. And that is a huge aspect. As I mentioned earlier, a huge input for both crypto and also data centers is energy. Your cost of energy, your reliability of energy, is the energy sustainable? Those are all huge metrics when you look at this space. So tying those two together and really, being a voice in DC as we navigate this journey together is a necessity. So that's one we're heavily involved in.
Got it. How critical do you think having stable power on today's grid? Do you think it's going to be critical to have stable power for today's grid? It's like an obvious question, but we're deploying a lot of assets that don't have reliable or dependable power. And I mean, you mentioned that crypto can be solution to that, right? To
Absolutely.
absorb it when you need it and turn it off when you don't. But yeah, why don't you just riff on that a little bit?
Yeah, so there's different ways you can look at it. Does crypto need super stable, reliable power? Again, like I said, not like a data center. But the only way you're going to get stable power is by having responsive loads on the grid. So you have your big nuclear, your big fossil, which again you asked earlier, your fossils, your gas powered, gas turbines or gas plants, and then a coal power plant. That's a dispatchable resource. As you have where the grid of the future is going, wind, solar, fuel cells, hydro, pump storage. Well, I guess pump storage and hydro is more dispatchable, but your wind and solar, and that's an intermittent resource. The more intermittent resources you have on the grid, the more dynamic and responsive resources and loads you are required to have. So you're going to need loads like Bitcoin mining that can turn off and turn on when needed. They're going to turn off when you have those big peaks when the grid's stressed, and they're going to turn on when there's very low load on that transmission line. They're going to support the load. And when you have a lot of these power plants, like the nuclear power plant that we're tapped into in Pennsylvania, by having the crypto mining behind the meter at that asset, it's a floor. So you're always going to have that load, and it's a load sink for that power plant. It keeps that power plant on. I mean, that's a very large power plant. So you need some other demand to keep a 2.5 gigawatt power plant online. But as you look at co-locating crypto to other assets, by having that floor position and be able to keep that power plant on, power plants don't like to start and stop. So if they can stay online, stay above that minimum load, or if that can be the buffer to let them operate more at their max load, power plants were built to operate their full load. If crypto or other assets can help a plant operate more efficiently at that higher load, it's a benefit for both sides.
It's a really interesting paradigm because prior to Bitcoin mining or crypto mining, I don't know that there was a comparable demand side solution or product that could respond as rapidly as Bitcoin does. And I mean, when you run the economics on deploying Bitcoin miners, it is helpful if they're on all the time, right? Like it makes the denominator bigger, which then brings down your total dollar per hash rate and your total capital cost, and like the economics are better. But they can, if you have a lower capacity factor for mining, then it can still be acceptable, right? You can still hit your financial targets. But I mean, can you think of an example prior to Bitcoin that like had as rapid of a demand response? Like it's almost like this product didn't really exist in the electricity or power markets.
Yeah, like our site in New York, we can take 93 megawatts off in a matter of seconds. So we actually can ramp down,
which is like unheard of, right?
Yeah,
I mean,
so we can ramp the whole entire site down under. I mean, we do it quicker than this, but we like to do it below 30 seconds. I mean, sometimes we can do it in 10 seconds, which is a very dispatchable and like I said, a responsive load. The only thing I can really tie to this would be battery storage. So battery storage, acts on the grid if there's a need for power. It can actually inject power on the grid, but the other side of a battery actually absorbing the power is very similar to crypto. So when the power is low or when there's a need to actually pull that energy off the grid, that's where the batteries will charge. Very similar to crypto. Crypto is going to take that energy, turn that into a decentralized currency, versus a battery is going to take that energy and store that and wait for a time to either sell that power for ancillary services or do like energy arbitrage. So I'd say it's very similar to the charging of a battery.
Yeah, no, that's a good point. Batteries, it's kind of similar, but yeah, there's a few dynamics that are different.
Just one more thing to add about a battery. I mean, you're talking about peakers and batteries right now. They're starting to become very competitive against a thermal peaking power plant. So as you look for when you're doing a contingency study in different areas of the grid, if you have a 3-hour, a 4-hour, 5-hour need, do you need to put a power plant there, or could you put a battery storage solution? So that's as you talk about stability, the answer is diverse, and that is one of the diverse solutions that we'll look forward to in our future grid.
Okay. So, but if it's diverse, if there is a mix and people have opinions on what the mix should be, what percent wind, solar, what percent hydro, do you have an opinion about kind of what the right makeup looks like?
Yeah, the reason why
Right
I'm
tool for the job.
smiling, if I had that answer, I'd probably be the richest man in the world. It's a tough answer. And again, it's going to come down, you have a large US grid. It's going to differ from different load pockets of different areas, both in the US, both in Canada, both around the world. So there's not one size fits all. Siemens used to run those exact studies for certain utility footprints that based on their load and their demand, what is the optimal mix? That's an optimal mix today. Can you forecast what that mix is going to be 5, 10 years down the line? That is the toughest question to answer. And that's, what everybody's really diving into when they look at their integrated resource plans for all these utilities. But it's going to be heavy hydro. You're going to have, nuclear. You're seeing a lot of extensions and a lot of nuclear plants, which I think is very positive for the energy grid. And there's going to be a lot of renewables. Like we mentioned earlier, the IRA is going to be driving a considerable amount of renewables. When I was at Siemens Gamesa, we were forecasting 10 gigawatts per year just in the U.S. year over year once the IRA really got put in place and guidelines set. I mean, that is a lot of energy coming on the grid. So you will start to see your renewables start taking down your coal. There will be, probably select few in certain pockets.
Except in India, China, and Malaysia,
Agreed.
and still just one atmosphere, right?
Yeah, no, absolutely. And as you look at other forms of technology, they're becoming more efficient, more diversified. You mentioned about H2 earlier. Yeah, I mean, you're going to have gas turbines running on H2. You're going to be running on different alternate fuels or some kind of syngas. Is there different fuels out there in the future? But to answer your question, it's going to be diverse. There's going to be a lot of both intermittent and dispatchable resources that meet the load and the demand that we have in our communities.
Yeah. Sean, thinking about location for these projects, I mean, you're focused in New York, and Texas is obviously a great target with kind of the ERCOT grid and amount of renewables. I know there's a lot of companies chasing that. Mm-hmm. Are there other areas of the world that are attractive, or are you guys thinking internationally? And maybe the easy answer is, wherever power is cheapest. But there's also the community stakeholder, state legislators that could be more accepting of crypto mining and have advantages for net zero power. I mean, how have you guys thought about this?
Yeah, I mean, you took the words out of my mouth. We're opportunistic. We'll look at energy price, sustainability. Obviously, we're not going to build like a small site outside the U.S. because just from economies of scale, having boots on the ground at a local site, again, that helps out your marginal cost. But we're open to any sites. We need contracted power. A lot of times, if you're taking the energy risk and you're floating on merchant power, that's not the best thing to look at, especially to sell to investors. But contracted, low dollar power, sustainable power, that's really what we're looking at as we look at expanding outside of our Pennsylvania and our New York asset.
Awesome. Cool. Well, Sean, I think you've answered a lot of my questions. But
not to lose my voice, you've been having me talk this whole time.
I know. Well, you're the guest. You're the podcast guest. I'm supposed to, right? We like talking about nuclear on this podcast, but what do you think is one of the most impactful steps that we can take to building more of it?
We need to educate the public persona. Again, like we talked earlier, there's still nuclear plants built in the 60s that are operating today. Once that nuclear plant's there, it's a very stable, usually they're very large loads as well. Again, like educating the benefit of nuclear power. Everybody loves talking about ESG, zero carbon. You're going to need nuclear to get there. You're going to need, because nuclear is a zero carbon.
Why do they only say renewables in all of those news articles, right?
It should be zero carbon. And nuclear is a zero carbon dispatchable resource, which is going to be needed as we go down this energy journey. So I think education's key. If we can get some traction on some of these small modular reactors, to start small, really prove out that concept and prove out the technology and prove out the rigidity of those solutions, that's what we really need to drive this forward. And I'm really optimistic. I think nuclear's got a huge runway ahead of us. And I'm really excited to see what it has. Proof in the pudding.
Okay, so changing public persona, would you say that's something that people can do to help move this conversation forward? I mean, how do we
Absolutely.
change that public persona?
That's a good question. It's got to be education on just nuclear technology, the safety measures that's taken to build nuclear. I mean, the reason why Vogel took so long to build, they have so many checks and balances to go through. That's why it took them, 14 years to build, among other reasons. But just really understanding the safety measures that go behind the design of a nuclear reactor, I think would really settle a lot of the, people's nerves. When people hear nuclear, they immediately think, "Oh my gosh!" They think of some of the disasters that happened in Japan for Fukushima, for Chernobyl, and some of those. But the technology has definitely come around, and it's a technology that's here to stay.
Awesome. Well, Sean, what's your vision of the future? Leave us on a positive note. How much crypto mining do we have moving forward? How many new nukes do we have set up that are actively powering this stuff? Yeah.
Yeah. So I mean, crypto mining in the U.S., I think we have 1,200 gigawatts of power plants across different assets. There's under 10 gigawatts
1,200 gigawatts of, sorry, that's total power, electrical power generation in the U.S.
total capacity. We're less than 10 gigawatts of mining in the U.S. So I do see this space growing largely. But to answer your question more from a macro view, it's going to increase diversity. Like I said, you're going to see a lot more renewable penetration. That's going to call for a lot more spikes, a lot more peaks and valleys in the grid, where you're going to need your battery storage. You're going to need these dispatchable resources. You're going to need responsive loads like crypto mining. It's going to be a pretty diverse grid from what you saw 50 years ago. Extremely different. The traditional grid that we had and the grid of the future. You start seeing bidirectional flow of power as you start having rooftop solar and a lot of community solar projects. So the grid has to be fortified for that. It's changing drastically, but the change has to happen. And, it's needed to hit a lot of the goals that we've laid out, both from a reliability front as well from a sustainability front.
I love that answer. That's a great place to leave it. So, Sean Farrell, really appreciate it.
Thanks for the time. Appreciate it, Mark.